Welcome, everybody. Thanks for being here. We are broadcasting live from Tampa, Florida. And where are you, Anthony?
Manhasset, New York.
Manhasset, New York. And so, as many of you know, Anthony and I have known each other for a long time, and we had a really good Luminary series with him a few months ago. And being that I'm a Bitcoin advocate and also really interested in what's going on here, we're going to talk about the SkyBridge Bitcoin Fund. I'm not sure exactly what you call it, but I think that's what you call it, Anthony. So thank you again for all being here. We're just going to have a nice dialogue today. Please send in your questions and I'll pay attention to the chat box and we'll get to as many as we can. We have a lot of people that are signed up for today's webinar, so please send your questions. Even if we don't get to them, we'll get to them eventually after, if possible. So Anthony doesn't need any introduction from me, so I'm going to let him take it over, and I'm going to go dark and be paying attention. And then please feel free to send along your questions, like I said, and thank you all for attending today. As Family Office Insights community has been awesome through all of this, and really appreciate and grateful for all of you. Anthony, good to see you again. Please take it away.
Okay, Arthur, thanks. I think in the interest of everybody, rather than me droning on, I'm going to give the high concept why SkyBridge entered the product, Bitcoin product, if you will. And then I'm going to talk a little bit about why we are so bullish on Bitcoin. And then I'll take any and all questions. And so I want to start out by saying that I was introduced to Bitcoin in 2014 by the Winklevoss brothers. They came to my SALT conference, made the case for Bitcoin. The coins were trading at $400 a coin. And my general reluctancy at that moment was what they were saying was going to happen from an institution's perspective. And I have to put my hat on as an institutional money manager and a money manager for RIAs and financial services platforms. It was too nascent for me, but I was watching it very, very closely. And then I had two Eureka moments, which I'll share with everybody. Eureka moment number one was I was on President Trump's transition team, and we were in the process of selecting the SEC commissioner. And this is all public information. There was a loose leaf binder of issues that had to be addressed by the incoming SEC commissioner and the commission. And in there was the whole discussion of digital assets and what the commission was going to do with digital assets. And I made a mark in my mind that, okay, this is going to be for real. What the Winklevosses were talking about and others, this is actually something that's going to be for real. So now I want to fast forward. I'm ejected from the White House in 2017. One of the great things about being fired from the White House, if you own your own company, you just go back and work at your company. And so that's exactly what I did. And the first thing I did was I purchased the URL skybridgebitcoin.com. And we began the process of doing our research. Bitcoin went into a crash. I guess it was $17,000 to $19,000 coin down to $3,000. Not saying that I was surprised by that, given the nascent nature of the ecosystem and the nascent nature of what was going on at that time. But my second Eureka moment was Bitcoin's recovery, because as Bitcoin started to rise into 18, 19, and the early part of 20, it became clear that what Bitcoin was actually achieving is the modern technological advancement in money. And you either see it or you don't see it. And if you see it the way we see it, or the Winklevoss brothers see it, or friends of mine like Mike Novogratz or Pete River, formerly of Goldman Sachs, or that group of Bitcoin bulls, then it's not too late to buy Bitcoin. Michael Saylor, who just put almost $2 billion at cost of MicroStrategy's money into Bitcoin over the last 6 weeks, has a great line that I'll share with you. It's very tough to buy your first Bitcoin, but once you own it, you're scratching your head thinking that I don't own enough of it. And so I want to take you to the 3 reasons why that is the case. Bitcoin, in our minds, is a monetary network. It is a technological advancement. The same way, if I hold up this phone, our parents and grandparents were talking from a corded phone. And in some cases, it was a rotary phone. And if you're going way back, you were connecting into a local operator that was connecting you into the person that you were trying to reach. Today, we can use this phone or the device in front of me. I can talk to you guys the way I am using video. This is virtually costless over the internet. Zoom is costing a small amount, but the point is we can have a point-to-point phone call today, virtually no cost, anywhere in the world versus where we were 30 or 40 years ago. So when people compare Bitcoin to gold, I just want to stop and say, if we've had technical advancements in telecommunications, technical advancements in travel, technical advancements in all different forms of our life, including computerization, the way we view motion pictures or stream information off of the internet, well, why do we not have a technological advancement as it relates to money? And so one of the best books that I have read is a book on money by Neil Ferguson. And he recants a 5,500 year history of money. And basically his synopsis in the book is, whether it's wampum, seashells, gold bars, silver coins, or paper, what money basically is a ledger between people. It is a ledger of measurement of an OZ between people. So I come to your house today and I do your landscaping, you pay me with a $20 bill. I can't eat that $20 bill, but I did that service for you, and you've taken something from your ledger, you've handed it to me, which has now been additive to my ledger. I go to the local pizzeria, I use that piece of paper, and then they supply me with the food that I need to eat. But at the end of the day, it's just a piece of paper. Some people here, particularly people that are of my generation or perhaps older than me, will say, yeah, but that's backed by the US government. It's got the seal of the United States on it. It's got some level of monetary policy linked to it from the Federal Reserve. And so therefore, that's something that I'm willing to accept. Flip side, though, is you could also look at that and say at the same time that you're willing to accept it, 23.2% of those dollars have been created in the last 6 months. So if you stop and think about it, what you're using as a store of value, fiat currency, you don't really have a lot of control over its production or the relative scarcity of it. Same would be true for gold, by the way, because gold is constantly being mined. And when the Spaniard conquistadors came back to Spain with troves of gold from the New World, they thought they were going to be super rich. But when they dumped that gold onto the market, it lowered the prices. And so what do we know? We're looking for things that have a store of value. There are a couple of different characteristics to a store of value. One of them is scarcity. In the case of Bitcoin, there are 21 million coins. No more coins can be replicated. I can explain why if people want to know. Number two, we need something definable that actually works as a ledger. And if we can connect the dots and transfer from one human being to the other and know that that transfer is valid, signed, sealed, and delivered, and of course, we can do that through the blockchain and that encryption. That is a super important story. And then the last thing is impregnability, not being able to crack that code, storage ability, the ease of storage, and transferability. So if you step back and you look at all of those different things and you go to Neil Ferguson's book, you check off each of those boxes, you see that we have finally created this technological advancement related to money, related to a store of value, and related to the concept of value transfer between two individuals. Last point I want to make on this, and this is perhaps the most important point, it is a network. It is a robust network. And so if I'm sitting here today, I can state this definitively to you. I'm more comfortable with Bitcoin at 35,000, 30,000, 40,000 than I am at Bitcoin at $400 in 2014. Why? Well, if you look at Bitcoin, you look at the pricing of Bitcoin, it's moved up in price as you've increased the scalability of the network and the number of participants in the network that are willing to accept Bitcoin as a store of value. And we can only guess at this, but it's somewhere near 140 million people right now are accepting this notion of Bitcoin. And lo and behold, Bitcoin is now scaled, and depending on where it's trading, because there is some level of volatility, Bitcoin has scaled, let's call it for today's conversation, to a $700 billion market cap. One rule of thumb in technology that you could take from Silicon Valley or the last 25 years since the introduction of the web browser by Mark Andreessen is that as things scale and they crest over $100 billion, they become the big fish in the pond. They become the king of or queen of the mountain. And so what type of ecosystems do we have that are north of $100 billion in market capitalization? Well, you have Amazon, that's a retail network. You have Facebook, that's a social network, literally the intersocialization of people on the Facebook platforms, including WhatsApp, et cetera. You have Google, well, that's an advertising and search network. All of these things have traded well above $100 billion. If anything, they're heading towards $1 trillion. And what makes Bitcoin so exciting to us is that we've reached that escape velocity where if you look at the 12 years since the inception of Bitcoin, Bitcoin is now at a spot where it is the big fish in the pond. It has slayed 6,500 other competitors that have constantly attacked its monetary network, attacked its monetary system. And so I'm not here to say that there won't be other successful digital currencies or coins. Certainly some of you have looked at Ethereum, maybe some of you have looked at Ripple. There's obviously a regulatory issue there with Ripple. But if you're looking at the entire ecosystem, Bitcoin is the big kahuna. And we are at the frontier of this, in my opinion. And so SkyBridge wanted to start with Bitcoin. And we launched this fund. We launched it on December 22nd with $25 million of our own money. We opened the doors to outside investors on January 4th. You can go to skybridgebitcoin.com. We built a very robust website there with interviews with our fellow Bitcoiners, risk analysis, what are the ups and downs of the story, PowerPoint presentation, but then also a detailed 2 presentations and conversation between myself and Brett Messing, the Chief Operating Officer and President of SkyBridge. So all of that's on the website. And of course, you can invest to the extent that you want to. You can, through DocuSign, you can go to the website and you can invest. It's a $50,000 minimum. It's a 75 basis point fee. Why did we choose those numbers? I'm about democratizing the industry. I'm about opening this up to other people. We're storing the asset at Fidelity. We believe that Fidelity, given its brand and the scale of its asset management company, the technology that they have there, the encryption and the cold storage applicability of what they're doing for Bitcoin, on top of the Lloyd's of London insurance, if God forbid any of the things that I just said go wrong, we think that's a very, very safe harbor to store our Bitcoin in. And that's given us great comfort, which is the reason why once we got that deal done with Fidelity, we felt it was important to get going and start a fund. It's a 3-month lockup. The only reason for that has to do with the regulatory issues in the United States. As everybody knows on this call, there's no ability yet to have an ETF or a mutual fund, but you can invest in the United States or outside the United States for that matter in a limited partnership structure that holds Bitcoin. SkyBridge has right now about 100 million in that Bitcoin fund, but across our platform at current market prices of about 35,000, we have about $350 million of Bitcoin across our platform. And we are adding, as I mentioned to Arthur before we started the webcast, we're adding to Bitcoin every single day, which has been an exciting part of our story. I'm going to say one last thing, and then I'm going to take it open up to questions. This is the last thing. Some of you are sitting there scratching your head, and you're saying to yourselves, well, all that is a computer code. Why wouldn't that computer code go to zero? Its intrinsic value is worthless. And so Bitcoin is just a smoke show. And there's some big holders of Bitcoin, big whales that are going to dump their Bitcoin. This is a pump and dump scheme. And what Anthony's saying to us right now is a bunch of bunk. Well, I'm going to leave you with this one thought. And I want you to think about Coca-Cola or Disney or any of these great companies that have been established in our lifetimes. In the case of Coca-Cola, Warren Buffett once said, you could burn down every Coke facility. You could crush every Coke factory. And then in the very next day, you have the brand and you have the formula. Guess what ends up happening? You could raise money to rebuild Coke. You could raise money to rebuild the Disney theme park. And there is, in our opinion, tremendous brand equity in Bitcoin and tremendous brand equity in the 140 million decentralized users of the Bitcoin network. And I don't want that to be lost on people any more than I would say to you right now, well, I have a piece of art in my living room. It is basically canvas. It's on wood. It's stretched canvas. And there's some acrylic paint put on it by somebody that happens to be famous. I can't eat it. It's difficult to store. I got to make sure it's at the right humidity. And God forbid it catches on fire, because then it goes down to being completely worthless. But at the end of the day, that collectible, because of its scarcity, is deemed to have value in our society. So don't lose track of the way people think about stores of value: scarcity, fungibility, liquidity. Bitcoin has all of those characteristics. And there's no reason why, as it becomes more and more exponentially acceptable, that we couldn't see Bitcoin trade to the same market capitalization as gold. So Bitcoin now at 700 trillion, gold at 10 trillion. You can see this opportunity.
Trillion?
Billion, 700 billion, and gold at 10 trillion. You could see this enormous opportunity. So I'll take questions now, Arthur. I hope that wasn't too long-winded. I tried to wrap that up in 15 minutes.
No, that was super, super helpful. Thank you. Being that you are investing only for now in Bitcoin, what is your view about potentially investing in other cryptocurrencies? And, aside from the obvious reasons, do you think that you might venture into other coins?
Yeah.
And if so, why and why not?
So for right now, because I do believe from an institutional perspective, we are on the frontier, I am very confident I can get clients comfortable with Bitcoin. SkyBridge will probably register and create a fund of funds related to other digital assets at some time in the near future. So I may raise a registered fund where we buy into 10 or so hedge fund managers that are just trading digital assets, Arthur, that may own other digital coins or digital currencies or derivatives, or trade the volatility or trade the curve in Bitcoin or other assets. But for right now, for simplicity purposes and being an entrepreneur and believing in incrementalism, what I want to do is have a Bitcoin only fund. It's toggled on Bitcoin. There's no investment management expertise here. There's no derivatives trading, future trading, none of that. You wire your money to us. We go out and purchase the Bitcoin the very next day at the weighted average price of what it traded at that day. So at 4:15, whether it's Galaxy, Coinbase, Fidelity, they'll give us the weighted average price that day, and it gets slotted into our limited partnership. And that's your NAV for the purposes of your line item and your account inside of our limited partnership. So somebody asked the question, if you don't mind, that I think is a really good one, more or less asking me, well, why would I use your fund? Why wouldn't I just go out and buy it directly, like through a Coinbase or Fidelity?
Good time to answer that, yeah.
Yeah, so Fidelity has a $5 million minimum for an individual. Coinbase, absolutely, you could access it through Coinbase, you could pay for it. Coinbase went down, meaning the grid, the internet went down on Coinbase. Their website was down last week. I'm not saying that's a big deal or not, but it did cause a panic for a lot of Bitcoiners that had their money at Coinbase. In the case of us, you're paying us 75 basis points for the Ernst & Young audit, the Fidelity cold storage, the insurance policy that Fidelity has on that cold storage. And if you believe these coins are going to trade to $150,000 to $180,000, you have to buy them in scale, in my opinion. And I think it's more cumbersome to buy them at Coinbase in scale, and much easier to buy them in scale through a vehicle like the one that we're representing. And again, if you believe in the macroeconomic direction of Bitcoin, like I do, the 75 basis points going to a place like SkyBridge is de minimis for all those safety locks and all of those features. Now, here's something I will say. If it comes to pass that there is an ETF, Van Eck just registered with the SEC, their ETF was rejected 2 years ago. If for some reason their ETF is accepted, that will be a cheaper way to own Bitcoin. And I would encourage everybody on this call to do that. But I'm also telling you that may be 3 months, maybe 6 months. It may be $40,000, $50,000, $70,000 a coin by then. This is a very unique opportunity for family offices, individuals to actually get ahead of the curve of the institutions. Look, you and I are in this business a long period of time. The pyramid usually goes the other way. The venture capitalists, the institutions get involved, and then retail. But because of the unique status of Bitcoin and the way it's being adopted in the human societies, it's going the opposite direction where the retail people are going to get this opportunity to participate before the institutions leg in. And so I'm just saying for some small amount of your money, it can go into a vehicle like the SkyBridge Bitcoin Fund, and then you can assess down the road if you want to put more money in our Bitcoin fund or you want to swap it into an ETF or somewhere else. But this is a very cheap way to get access to Bitcoin. Now, again, I'm not gunning at other people, but I just want to lay the case out. If you have the Grayscale Bitcoin Fund, it's 2%. You're buying it on the pink sheets at a 20 to 30% premium to the net asset value of the coin. And that's because it's somewhat illiquid and people are willing to pay that premium to get access to the upside potential of Bitcoin. We've broken the back of that by offering out something very comparable, 75 basis points versus 2%. And oh, by the way, you get the net asset value from us. You don't have to pay that premium. And again, it's not Grayscale's fault that it's trading at a premium. It's just the way they had to put their structure together to make it SEC compliant in the United States.
So
this
Anthony,
is a new derivative technologically and regulatorily that we were able to take advantage of now.
so one would argue that for 75 basis points, and I have no skin in the game except that we're friends, so I'm not promoting Anthony over somebody else. But I'm saying,
I hope to God you are promoting me over somebody else.
I have to do it quietly, full
No, I'm kidding. I'm kidding.
Yeah. So the
Trying to make this live. I feel like I'm droning on with a lot of drivel about Bitcoin, but go ahead.
I already got clapping hands going on here.
Yeah, I'm not commenting on your hair yet. I'm going to wait until we get closer to the end of this thing.
I might cut you off. So the one would argue that you couldn't replicate what you're delivering to mitigate the risks for the 75 basis points on your own, right?
I don't believe you can do that in scale. Moreover, I don't believe that you're going to get yourself comfortable with all the providers if you're going to do this in scale. And scale definitionally to me is you're going to put $300,000, $400,000, $500,000 of your capital in Bitcoin. I'm going to tell you right now, if you're my client, I want you storing it at Fidelity. Oh, by the way, you can't do it at Fidelity because you need 5 million. Okay, well, come through my fund. We're paying the asset management fee in scale for you in our fund. We're aggregating for you. We're democratizing it for you. We're making it easier. And yeah, you can get out of it, someone's asking here, one of your colleagues, about the NAV trade vis-a-vis Bitcoin. I know SkyBridge trades at NAV, but is the size of Bitcoin and the premium trade represent a risk to the space? It's a very, very good question. We would say no to that because of the depth of liquidity. By the way, if we were looking at this in 2014, $400 a coin, we would say yes to that. But where we are right now, given the total market capitalization and the marketplace players, if you will, the spreads in the marketplace are pretty tight, and we're getting the weighted average price at day's end on the way in and on the way out. Are we paying 5 basis points for that? Yes, we are. But I think it's a very de minimis. I think it's a very cheap way to access it. And I think it also plays to the liquidity characteristics and our scale. You're coming in with your small investment. I'm telling you, you're better off availing yourself to our aggregation, where we can come in at size, and we think we can get better execution at size for that reason, Arthur.
So when one makes an investment and let's just call it what it is, Bitcoin is still an unknowable on some level to many. One looks at the opportunity of what that is, but then one looks at the risks. Can we just talk about the risks and be clear what they are in your view?
Well, I think there are three major risks, okay? And there's probably many other risks that are exogenous. Obviously, I'm not going to be able to predict the meteor strike risks or the nuclear attack risks and all the other risks that you have living on planet Earth and having your money invested at Amazon, Bitcoin, or anything else. But specific to Bitcoin, the number one risk is a regulatory risk. Right now, it's banned in China. They're mining it like crazy in China, but they won't let you use it as species or legal currency or legal tender in China. The flip side is Japan. It became legal tender, can be used as legal currency in Japan as of 2017. In the United States, we have this very gauzy, very restrictive regulatory rubric around digital assets right now. Now, Gary Gensler, a former colleague of mine from Goldman Sachs, who's had a lot of regulatory experience, as the chair of the CFTC as an example years back, if he becomes the SEC commissioner, and I predict that he will, he taught a digital asset class at MIT, and he is somebody that sees the future somewhat similarly to us. I don't want to speak for him, but I do think that he will advance the curve of where Clayton was. Clayton, I would describe as somebody that had a finger in the dike of Bitcoin and other digital assets. Listen, you get to be a certain age, you don't like things changing. I'm not going to name the billionaire, but I have a very close billionaire friend of mine. He's 85 years old. He doesn't look at email. Okay, some of you will figure out who it is. And so when I email him, his assistant has to read him the email. Then he calls his assistant on probably a rotary phone, okay? And he tells the assistant to write back to me, and she types it into the computer. Some people, they get to a certain age, that's it. Warren Buffett calls this stuff rat poison. Bill Miller, on the other hand, says, well, it may be rat poison, but the rat may actually be fiat currency, and the rat may actually be the paper that's in your pocket because of the scarcity value of Bitcoin and the fact that it's decentralized. It can't be manipulated by a central banker. So that adaptability. So the first thing is regulatory. The second thing is adaptation. Is it going to scale in its acceptance? And then the third thing is what Donald Rumsfeld would say: we have known unknowns and we have unknown unknowns. Okay, and so since we have unknown unknowns, and that would be true for anything that you own, by the way, it's for your house that could have radon in it, it's for Amazon, it's for any company that has an auditor where there could be, God forbid, a numerical slip up in the numbers. It's for anything that you own. There are unknown unknowns. And Bitcoin certainly has those, but that is a reason why I think there's such a major opportunity in Bitcoin right now. Because if we're right that this becomes the Bitcoin standard, if we're right that this will become a store of value to compete with gold, some of the Bitcoiners and the Bitcoin maximalists will say, well, it's way better than gold, so we'll trade to a higher market capitalization. I'm not suggesting that. I'm suggesting, hey, if we're right, and we're 20% right, well, this is a $2 to $3 trillion market cap product, and we only have to be 20% right. But if we're 100% right, it's 5 times from where it is today. But yes, there are risks. You are on the frontier. We've done everything that we can, being this early into the game, to make sure certain risks are off the table. Audit risk, regulatory risk by having the LP wrapper, storage risk by using Fidelity, which has a Lloyd's of London insurance layer on top of Fidelity. But yes, there are risks. I don't want to pretend otherwise. People call me up and say, well, how much should I put in this? I say, 1 to 3% of your assets, 0.5 to 2% of your assets. This is not something you're betting the whole ranch on.
So I think it's pretty clear, but let's clear it up. For now, the fund is not actively managed. It's a buy and hold.
Correct. It will. This fund will never be actively managed. One of your contemporaries out here is calling you Ben Franklin, but I think you're way better looking than Ben Franklin. Like when I look at your face,
you're so kind.
And I see that big smile. I think you're way better looking than Ben Franklin. It's just me,
Yeah, you're very, very kind. FYI, the rat. Yeah, there we go. Um, the so um, what do you think the longevity of the I know it's super hard to predict, but will you close it at 300 million, 400 million, 500 million?
Well, listen, people, I don't know the answer to that. If this thing is scaling, there's no reason, given our relationship with Fidelity, that we can't have a $500 million fund. Now, Grayscale's got a $20 billion asset management complex related to specifically Bitcoin. Are we going to be that big? Probably not. But I don't see any reason why we can't have a scalable fund, because it's very, very liquid. We've got a great storage facility that has an unlimited capability for storage. I've got a reasonably good to great sales and marketing team that can service customers and service clients. And so, I don't want to limit us. I'm not going to say right now we're going to cap it. Having said that, I've been prone to do that before. We capped our Opportunity Zone fund. For a while there, we stopped taking money into Series G. Then we had difficult performance in Series G. Now it turns out we've had the best performance. Our April 1 performance to today, those 9.5, 10 months have been the best of our careers in Series G. So of course we opened it up. And as you know, as life is, people want to buy you when you're at the top and they want to sell you at the bottom. They should be doing the exact opposite. I think one of the big questions people should ask, Arthur, is, well, Jesus, it's at 35,000 a coin. It was at 16.5, 6 weeks ago.
Mhm.
Why do you think that we should be buying it here? And again, if you've drawn the conclusion that JP Morgan has, that Guggenheim has, that SkyBridge has, that Binance has, you have to either have that Eureka moment where you see it. Michael Saylor sees it. I see it. You either have to see it or you don't see it, that this will be comparable to gold. This is digital gold. My partner, Brett Messing, says this is better at being gold than gold is at being gold. And so if you see that, then you're coming into this thing with us, and you're not looking at the day-to-day price movements, and you're not worried that you're buying it at 38 versus 16 any more than I'm worried that I didn't buy it at $400 years ago.
So you mentioned,
and let me just say this last thing, though. Amazon, the same thing. Let me just be quick on this. If you and I were sitting here and I was presenting Amazon to you, and it was in the 12th year of Amazon's origination, let's just point out 2 years before Amazon was incorporated, it was worthless. It was in the mind of Jeff Bezos. He had then incorporated it. He called it Relentless. If you go to relentless.com, it flips you over to Amazon. And then he changed the name to Amazon. And then he started it. He had like a desk with those horse easel things, if you will. He put a door on top of it, made his desk. Amazon was virtually worthless. And then 12 years later, if you looked at the Amazon stock chart, it looked amazing. And you'd be saying to yourself, well, geez, I missed it. But yet, if you invested in Amazon in year 12 and you rode it to year 24, which is where we are now, you had a 64x move in Amazon. Yeah. Now, granted, it had 50% drops 6 times since its IPO. And so if you had a 1% position in Amazon and you locked it away, you were very well served by owning Amazon. And I'm telling you, if you missed Amazon, and you miss Facebook, the social network, and you miss Google, the advertising and search network, and you missed Amazon, the retail network, you are at the nascent stages still of the evolution of a decentralized monetary network, and you should avail yourself to have a small bit of it.
So a bunch of the names you mentioned are who have come out and given publicly credence to the Bitcoin trade or buy. One of them, you mentioned Saylor. Tell us a little bit more about who Saylor is without getting in any trouble, because I don't know that everybody would recognize that name.
So Michael Saylor is the founder of MicroStrategy, which is a software company. He's an MIT grad. He got his engineering degree in chemical engineering and rocket science. He had his ups and downs at MicroStrategy. You could read about that. Just go to Google. But about 6 months ago, after spending a tremendous amount of time in research on Bitcoin, he made a decision to move his cash on his balance sheet into Bitcoin. And he basically said, we're in the middle of a pandemic. The dollar is being multiplied. And again, I'll point out, we have 23% more US dollars today than we did 6 months ago. And he said, you know what? I'm not super comfortable with what's going on with fiat currency globally. I'm going to move my money into something that's more scarce, something that's more discernible on the blockchain. Someone's asking if any more than 21 million coins can be mined. And the answer to that is no. It's too complicated for me to explain on this. So I'm going to recommend a book to everybody. I just have to look it up in my phone. But the book's title is Inventing Bitcoin. And you can get it on Amazon. It's by Van Pritzker, and it's called Inventing Bitcoin. And I'll tell you what, it's like a long magazine article. Once you read it, it'll explain everything that's in there, why it sustained the attack that it had for the last 12 years, why you can't mine more than 21 million coins. And so what Michael Saylor did was he moved $425 million into Bitcoin. His average price then was like 12. He then said, you know what, that's not enough Bitcoin for me. So he raised a $500 million convertible bond offering. It was oversubscribed. They printed $600 billion in a convertible bond, and he went out and bought more Bitcoin. His $1.2 billion of cost is now worth $2.7 billion. If you have an interest in Michael Saylor, I've done 2 interviews with him. You can go to salttalks.org, or it's actually salt.org/talks. And you can look at the Saylor interviews with me or the Winklevoss interviews where they discuss their Bitcoin positions. And they discuss, stock flow charts, supply demand reasons why this is squeezing upward. And again, not that it won't have volatility, not that it won't have oscillations, but this is what you would learn if you go to those interviews or you read Inventing Bitcoin.
Let's talk about the volatility, because I think that's something one would have to get settled with, right? Because just today, just in the last 24 hours, right? If you looked at the Amazon stock chart, it's not volatile like that. And I'm not saying that that's better or worse, but I think if you don't mind, just help people get settled if they care to invest on the expectation of volatility.
Yeah, well, here's what I would say, and this is a Buffett comment. You either understand the thing fundamentally or you don't. And if you have really good fundamentals, then volatility creates opportunity, right? That's what Buffett says about Mr. Market. He's hypochondriac and he's bipolar. On certain days he's euphoric and you can sell into that, and on other days he's depressed and all of a sudden you're buying stuff at ridiculously cheap bargains. And so Bitcoin has got that bipolarity to it right now because it's a nascent idea and there are a lot of skeptics. I would tell you again, go back to Amazon. Look at Amazon's price action from January to March of 2000. That's 21 years ago. And then look at it on March 9th of 2000 when the NASDAQ cracked open and went from NASDAQ 5,000 to NASDAQ 2,600 in like 2 weeks. Amazon cracked open, was down 60%. And you could have said to yourself, okay, that was stupid. Why did I own Amazon? This is this incredibly volatile thing. I should have stayed away from it. But in the truth of the matter is, that was probably one of the best securities in the history of the stock market. So what I would say about Bitcoin right now is that it's volatile because there's a tremendous amount of new entrants entering the market. It's liquid, but it's trading. When high volume hits the market to buy, it pushes it up. High volume hits the market to sell, it pushes it down. You're down $4,000 or $5,000 today. You were at $30,000 over the weekend. You were back up to $39,000 a few days ago. But I would say to everybody on this call, if I'm right and it becomes a new technological monetary standard, those movements, that oscillation is just noise. Volatility, in fact, is not a measurement of risk. And I would also encourage people not to be a short-term holder. Now, we have a 3-month lockup on our fund because that was the shortest amount of time that we could have to make it regulatorily approvable to the SEC for purposes of a limited partnership. Remember, you can't trade a limited partnership. There's a lot of probably tax attorneys and accountants on here that get that. But having said that, I'm also glad that it's a 3-month lockup because I don't want people to trade it. I want you to find enough money, tiny bit, put it in a lockbox, drop it in our fund or pick another fund. Don't pay the premium for it because you've got products like ours that you don't have to pay the premium anymore, and put it away. And when you do that, you wake up in 3 years or 5 years, I think you'd be a happy person.
The tax issues are still a bit amorphous, but maybe not because you've done all the investigation. Is someone going to get a K1 at the end of from the fund? And is it ordinary income? Is it long-term capital? How's that K1 look at this point, as far as you know?
Yeah, it's a good question. So, we're buy and holding the fund. Okay. If we do get massive redemptions at the end of the year, let's say we buy the fund at $1 on January 1st, and now the fund is $100 on December 31st, and 50% of the people leave. Okay. Those people are going to get hit with the tax load. I mean, everybody on this call is sophisticated to know what limited partner tax stuffing is. You're not going to like me saying this if you're short term, or don't come into our fund because you're going to get stuffed with those taxes. And so the long-term holders of the fund are going to be rewarded, and the short-term holders are going to get stuffed. And so long-term holders of this fund should by and large have a large percentage of their gains, if not all of their gains, in long-term capital gains.
Yeah. So,
And that, by the way, is spectacular because Bitcoin, for purposes of taxation, is treated like a collectible. It's treated like a piece of property or an asset. And for those reasons, it has a lot of tax benefits as well.
yep. I mean, for that reason alone, independent of the volatility, you want to be a long-term holder. I mean,
listen, I put a ton of money in on December 22nd, and every day I've been putting a little bit of money in for my family, myself, my children's trusts. And I'm just going to have an average cost over the next 6 or 7 months, whatever it is. And we'll see what happens. We'll look back in 3 to 5 years. If we're correct, I think people are going to be very happy.
so can you make
By the way, if we're not correct because of those unknown unknowns, I'm telling people to put a very small amount in this.
money that is not going to change your world if it ends up going to some version than what you put it in at? I don't want to say zero, but something other than what you put it in. So, do you have an opinion on any other crypto?
I don't, Arthur. I've done all my homework on Bitcoin, and I was with CZ from Binance. He's a very famous billionaire living in Singapore. I did his evening podcast. So it was 8:30 in the morning in New York, but it was 8:30 in the evening in Singapore. And we were talking about this. And what I said to him is, believe it or not, we are still so much on the frontier. If you heard me talking to due diligence people at wirehouses, or you heard me talking to due diligence people at commercial banks or RIAs, you would be blown away at how early we are in terms of Bitcoin's adoption. You'd be absolutely blown away. So I don't want to clutter the space with other digital currencies. I'm not saying that they're not great, and maybe there will be a few that end up great, but I don't think anybody's going to slay Bitcoin. Bitcoin has $700 billion of market cap for a reason. And it's the same thing like you and I could mix the formula for Coca-Cola and put it in this cup. You could taste it, but it doesn't have Coke's name on it. And you're not going to get the same scalability. There's a branding thing that's taken place to that decentralized network that is incredibly valuable to coin holders.
Do you think that I'm going to go a little bit out on the limb here, that the libertarian concept of owning a digital currency, where many of the early adopters of Bitcoin, is something that some people feel, since it was painted with that brush, that it was just a way to buy weed on the web or drugs or all that kind of stuff. Do you think that is long since gone for most of us?
Well, I do. And so if you remember when the internet came on and Netscape brought out the browser, you had limited success. The guy by the name of Bill Gates said that the internet was a fad. And then the internet started to being used for pornography. And then all of a sudden, pornography became very profitable, and they started expanding the pipes and global crossing and all this other stuff. And you're like, okay, well, the internet's a joke. People are just using it for pornography. And then Jeff Bezos came along and said, well, no, I want to sell books. Well, why do you want to sell books, Jeff? Well, because it's an easy thing. I can just take the book. It's roughly the same size, right? This is his writings, by the way, which I recommend to everybody. And I can mail it all over the world, and it's easy. Oh, by the way, what do you really want to do, Jeff? Well, I want to go A to Z, Amazon. I want to go A to Z. I want to sell everything. Okay, so he's got 46% of the online retail market because he's a lunatic. Okay, and so that's what happened with Bitcoin. Bitcoin swallowed up everybody in this decentralized way. But like the internet itself, did it start out in a fakakta way where it was tarred and feathered in the early part of this? Yes, it did.
Nice.
But it's not that anymore.
Nice word.
Hopefully I pronounced it right. I am from New York. Hopefully I got fakakta right.
Excellent. Well, this has been awesome. Really, really appreciate you being on here. We have a couple.
If you don't mind, I'm going to go 30 seconds on a few of these questions over here. Yes, the book is called Inventing Bitcoin. It's by Prisker. The lockup is a 90-day lockup. If you want to get out, it's 90 days, but you have to give us 60 days notice so that we can prepare to sell for you. Yes, you can disclose this on your if you go to the IRS forms now, they do have digital assets on the forms, which is a sign that the IRS is already accepting this. There's very good regulatory clearance that the IRS has decided, man, this thing is big stuff now, and therefore I want to put a tax on it. So that's more indication that we're going in the right direction. Talking about Bitcoin mining, I would implore people to look at Inventing Bitcoin. It explains how the coins are mined. Not to bore people, but we went through a halving cycle in May of last year, which means 1,800 coins were being spit out by the mathematical properties of mining a day. And then in mid-May, they halved down to 900. That will happen again. It'll go to 450, then it will go to 225. And by the way, as every halving cycle takes place, there's less and less supply available, which has forced the price up. Can I talk about mining costs? I really can't because I'm not an expert on mining costs. But depending on your electricity costs and your computational value, you can mine these coins right now from anywhere from 7,000 to 20,000 a coin. They're trading at 35,000. But, again, they're hard to mine, though, because the algorithm, as more people enter the mining space, the algorithm gets more and more complicated to unlock the coins. Okay, how much is the raise? Would you be opening to hiring an agent? Well, email me. My email is Scaramucci@skybridge.com. I'm not sure if I'm open to be hiring an agent, but I don't know. I'm a commercial guy, so I'm willing to listen. Okay, I think that's basically everything.
Yeah, we have one other question about the tax, IRS efforts and tax compliance and so forth, but I think we answered part of that.
Somebody logged in late. What's Fidelity's involvement? We're partnered up with them to be our storage partner. So you're getting the SkyBridge interface, the SkyBridge user friendliness of our sales team and client service. You're getting Ernst & Young as your accountant, Davis Polk & Wardwell as your lawyer, and all of your money, all of your digital assets are stored at Fidelity. So you're getting Fidelity's balance sheet, which is pristine, no debt, several $1 trillion asset manager. And then you get the Lloyd's of London insurance on Fidelity, which provides an additional layer of safety.
So Anthony, a couple questions before that one. What do you think about the ability of Bitcoin to become more than a store of value?
It's a good question. I think when it first came on, people thought it was going to replace the dollar, okay, and it was going to be quote unquote currency. You can't bring a gold bar to the Starbucks. So, could it? Yeah. We just did a secondary, pre-IPO secondary for Chime. SkyBridge took down about 45 million of that for some of our interested investors. I think that company goes public next year. Companies like Chime, you'll be able to interface on your phone through Apple Pay or Chime Pay. Will there be a sleeve for Bitcoin? I believe there will be. PayPal has one. Square has one. And so, yes, could there come a day where you're electronically paying each other in Bitcoin? Yes, I think that is possible. If that is possible, look out. Those coins are going to be worth a lot more because everyone's going to have them on their phones. Everyone's going to need them, and everyone's going to trust them in terms of the value transfer. And so therefore, these coins, again, the Winklevosses think they're going to trade to $500,000 a coin. You can go to their website and you could read their essay as to why they believe that. But I'm not going to say that. All I'm saying is if I'm 20% right, these are $150,000 to $200,000 coins pursuant to what JP Morgan, who's very conservative, is saying about Bitcoin.
Yeah, Mike, if people look, if you're spending a Bitcoin to me right now on
somebody's answering, yes, you can commit 50 and put in two $25,000 tranches. We've been doing that all day.
Good.
Someone just asked that. Yes, I mean, we just want to get to a scalability level so that when the regulators come in, they don't think we're selling it to mom and pops. This is a qualified level.
So you mentioned to me that you don't trade Saturday and Sunday, or you don't buy Saturday and Sunday. Any reason?
Well, because we like using the major providers. We like using Galaxy. We like using Fidelity. We like using Coinbase. We could trade overnight in Singapore with Binance, but for right now, we've elected not to.
Yeah.
Could that be the case? Yeah. I just feel that we're open for business Monday to Friday. And I want, as soon as your money comes in, I want to put it to work. I can't take your money on a Saturday and Sunday. So that's not why we're not trading it.
Great answer. Okay. There's one last question here from Anthony. Hi, Anthony. Is this efficient for both the fund and the investor, which is buy and hold? You see that last one?
Yes, I think it's remarkably efficient because I think it gives you this, you'll have a low tax basis and you'll have a high capital gain. I'm taking this out for a reason, okay? Because this does not look like Arthur Bevelis. See that? I just want everybody to see that. Okay, and this is the past. Okay, you see that? This piece of paper.
I have a lot more here than that.
This piece of paper, also known as an Italian single, right? These are Italian singles if they were in Tony Soprano's hands, right? That's what Tony would call them. This is the past. Bitcoin is the future. And this does not look like Arthur Bevelis. Okay, I just want to make sure everybody knows that. Okay, before we leave the call. You're a lot more handsome than Benjamin was.
You're very, very
by a quantum.
Yeah, very, very. Brando in the
Brando, yes. That I'll give you. I'll give you Brando in the last tango. I like that. Okay, Anthony Gordon's onto something. I'll give you that.
Listen, Anthony, can we do this again?
Yeah, anytime. And I appreciate someone just put up our website, the URL, skybridgebitcoin.com. There's a ton of information. I just gave everybody my email, Scaramucci@skybridge.com. If you have an interest, reach out to me. Usually takes me about 10 or so hours to return my emails, but I'll get to you.
Yeah.
And I really appreciate the opportunity to be on, Arthur, and thank you. And I'm just to let you know, my hair is never going to look like that because I have so much hair dye in my garage, like stacks of hair dye. This is Latin American dictator brown. In case
I am not buying any of that.
I was just letting you know, I was using Cuban leader black on television. It looked like absolute shit. So I dialed it back to Latin American dictator brown. So if you ever need it, I've got it in my garage.
Well, listen, another thing that you probably have in your garage, because I'm watching The Sopranos again because of Mary that you just met. She hadn't seen it. He put all his cash in the bird feed, the cracked corn.
Yeah,
in his garage.
of course.
Just want to let you know.
Of course. Well, no, this is from my grandfather. You always have to have some money on you. You never know what the hell's going to happen, right?
That's right.
But someday you're not going to need that. You're going to just have it on here. Yeah. You already do on your credit cards, but someday you're going to have the actual coin right here. And I think that's the future. We got to get ready for the future.
There are all these great comments. I'm going to share everything with Anthony, guys. Thank you so much for being here. I'll make sure he gets all those.
Have a great weekend, guys. Arthur, thank you again.
You're very, very welcome. Talk to you later. Thank you.